Business Today Television. I'm Sakshi Batra and this is Market Today. Well, the last day of trade of this week, the last day of trade of this month, January, and the first day of the series of February F&O as well. Well, yesterday when we did see that the markets exhibited high volatility on the monthly expiry day, but managed to extend its winning streak for the third consecutive session. Also, we've seen slowly and gradually the markets have managed to pull up above 23,200 and ended at 23,250 as well. And this was pulled up by large heavyweights like Reliance Industries. Although the broader markets lagged a bit, they were flattish yesterday. But again, in page today, we're going to be seeing the budget around the mood around the budget 2025, which is just now a day ahead of us. US Q4 GDP data, the positive global equity markets, Q3 earnings, all of them will drive the benchmark indices and the market move today. Like I said, the Nifty is beginning the February F&O series, and that's one day before the presentation of the budget. So index is going to be going into a very important event on the back of 4 consecutive months of negative returns, the longest losing streak that we've actually seen in over 20 years for the markets as well. Again, today is also going to be important because the economic survey of 2024-2025 is set to be released today. That will provide a comprehensive review of India's economic performance over the past financial year. The report will be as is always, it's always published a day before the budget. It will also outline the trends in the sectors like agri, industry, services, and they will also suggest some policy measures that are needed to address the economic challenges and to drive growth at this point in time. Of course, the forecast around GDP will be very important to track, and that will probably give us a hint of what the budget, outline could be or focus could be this time around. Now, as far as what the global setup is, remember the Dow Jones Industrial Average and S&P 500, they ended higher in trade. The Nasdaq was about 0.25% up as well. So the recovery continued there. The Brent crude again moved about 0.4% higher at $77.2 a barrel. And we also saw that the spot gold inched again up by 0.04% at $27.95 a barrel as well. So the gold prices continue to inch higher internationally and domestically, both ahead of the budget. Now, what we will also look at is how President Donald Trump's statements are coming in as far as tariffs are concerned. He's confirmed that he will implement 25% tariffs on Canada and on Mexico starting 1st of February. What he also said is that he will also implement China tariffs as well, although that's unclear how much. What he's also warned is of the BRICS nations to think of an alternate currency against the dollar. If they do that, there could be 100% tariffs as well. So those are the tariff talks that have already started to pour in strong. Now, after this, we saw the Asian markets open higher in trade. Japan, Australia, they were higher in the early morning trading session, even though some of the Asian markets are still closed for the lunar holiday. The Nikkei and the ASX were up by about 0.04% to 0.5% respectively. Kospi, after 4 days of holiday, came down now by about 1% in trade. Now, as far as the gift Nifty trends are indicative of a positive start yet again at 23,420 odd levels for the Nifty today. Although the foreign investors have managed to again sell in the Indian equity markets for the 20th straight session now, they've sold stocks worth about 4,583 odd crores, and the domestic institutional investors were net buyers for 31st straight session, mopping up equities worth 2,165 odd crore rupees. So that's the entire setup. Let's now get you the market expert voices as well. We have with us a very special guest joining in, Mr. Mayuresh Joshi, Head of Equity Research, William O'Neill India, is now with us on the show. Warm welcome to you, Mayuresh. Good to have you with us. Just a day ahead of the budget. Is the nervousness going up? Is the expectation going up? What exactly are you looking at? Or are you actually not thinking of anything at all and you will just think of it as a non-event? What is it that the markets expect from the budget this time?
Sakshi, I think the markets always are fearful that will the budget throw up something which will probably haunt the markets to a certain extent. And all industries and all sections have something that they expect from the budget itself. So largely from our side, I think our take is that it might be a balanced budget with a strong emphasis on capital expenditure and a strong emphasis on growth as well, at the same time maintaining a fine balance in terms of the fiscal deficit. So I think that's the broad contour that the budget might throw up. So I'm not expecting not a great deal from the budget. So I think for me, think it will be a non-event going forward. But anything in terms of a positive surprise from the budget will be happily taken by the market.
Okay, got that. Tell us one thing that you think, Mayuresh, will actually, bring back the Nifty out of this 4 months of a correction zone and put it back again on the growth path. And the one thing that could actually be negative for the markets, and we could again risk slipping lower from what we tested in the last few odd days.
So again, two things actually. I think on the positive side, I think if the budget is expected to probably showcase specifically in terms of the revenue expenditure that they are probably allocating a lot, not in the form of subsidies, in the form of meaningful revenue expenditure, which can probably prop up some element of consumption slowdown that we are witnessing in the economy. I think that will be taken up by the market with both hands. Obviously, I think the RBI liquidity measures that have got announced is a step in the right direction outside the budget. Obviously, a lot of things happen outside the budget as well. So I think one must remember that. The second element is in terms of how do they push private capex up, because private capex is clearly lagging. So are there some incentives coming in for the corporate world that if they do invest in certain areas, certain sectors, certain more areas getting covered under infrastructure status as an example, just what I'm putting through, maybe that pushes through a lot of advances growth that the banks can probably give to these sectors as well. And a lot of private capex getting driven in with those incentives given in as well. So I think both legs that the economy probably wants in terms of investments as well as consumption, I think that can show a strong uptick. And if that macro push is probably given, you'll probably see some element of micro revival coming back, which probably should affect corporate earnings as well. Negative thing again, I think nothing should come out, as I'm saying, in terms of capital market norms per se. And if that probably happens, I think it should be smooth sailing for the markets, and the markets will look forward to both these factors, both macros as well as micros in terms of corporate.
Absolutely. So any tinkering on higher side for the capital gains would be probably negative. What about the STT? I remember reading your note, you were talking about abolishing of the STT as well. Is that something that you're hoping for?
That's the hope. But again, I think they've garnered a decent amount, right? So if there is, again, if there is some element of reduction in taxes for the salaried class, you have to offset it somewhere. So again, that's the hope. Whether it happens or not is it.
Absolutely. But you rightly also pointed out, Mayuresh, that probably the markets were have in the last few days cheered more of RBI measures than kept hopes high from the markets. So RBI's liquidity measures were good enough to pull the Nifty back above 23,000. And that being seen as a precursor to the interest rates. I mean, already the OMO bids have seen of 1.2 trillion rupees for about 20,000 crore rupees worth of securities. The NBFCs are becoming increasingly important for the underserved sectors, especially the small businesses and households as well. So, do you think the onus will lie more on the RBI to lift us out of the slumber right now than the budget?
So again, I think if that happens, right, the street believes that there might be a token 25 bips rate cut that probably comes through. But with the liquidity measures, what has actually happened, Sakshi, is that the infusion that has happened into the system, a lot of the banks which had stretched LDRs should actually benefit with this liquidity infusion. So it's sort of a rate cut for those banks having stretched LDRs as well. And let's not forget, I think the NBFCs, select NBFCs, the wholesale rates start easing at that bit. So it tantamounts to some sort of a rate cut as well. Let's also not forget what is happening globally, right? The inflation numbers, specifically core inflation, still remain very, very sticky. And therefore, if the rate cycle globally is delayed or has a lag effect, maybe we have a token cut, but then the next cut might be with a lagged effect as well. So I think the markets might cheer it, but the markets are also just stating that interest rate cycle might be a little bit lagged or deferred this year.
Right. Absolutely. The pre-open rates are upon us. We did see a flattish with a positive bias opening for the Nifty today at 23,288 odd levels. But let's see if that sustains on the higher side. That's something that we will be looking at. And of course, a whole host of stocks within the F&O space will also be important. Remember, solar industries, Torrent Power, NCC, there are four stocks, NBCC and Phoenix Mills. These are the four stocks that have been included in the F&O. So that will also get a reaction today. There are some earnings reactions also coming in. Let's look at, for instance, Green Lamb that's opening lower, Goa Carbon that's opening lower, Free Cement is opening higher, about 2.5% up, and that's as far as the Q3 largely in line with estimates coming in. Kalyan Jewelers, EBITDA was up 19% year on year, but the stock is indicative of a sharply lower start at 10% lower. But Naveen Fluorine, here the Q3 revenues were in line, 10% higher. PAT and EBITDA margins were above the expectations, and therefore you can see a 10% uptick on this one. Biocon came out with the earnings slightly on the muted side, and therefore you can see a 3.3% lower, beginning for this one. But there are some order flows as well. Ircon International is opening higher by 1.6%. That's a 631 odd crore rupees of an order coming in. Again, from the earnings factor, we forgot Bank of Baroda. That was the big one that came in 0.8% higher. And Abbas Financiers also opened up higher in the pre-opening trades, reacting to those earnings that are coming in. So those will be some of the numbers that we will continue to sift through. And Dabur also, remember, the commentary was very, very positive. Bottoming out of the lower demand is what the government, that the management has indicated, a percent higher for Dabur as well. So those will be some of the numbers that we'll continue to focus on. Let's bring in Mayuresh back into the conversation. Mayuresh, first up on Dabur, particularly FMCG, which has been a big, big concern. Volume growth here, the muted demand here. Things looking up now that management is saying that things will largely improve from here on, and they do see a bottoming out, especially when it comes to the urban demand.
I think at least the commentaries are indicating that. But whether urban demand will come back strongly in Q4, I think that is still a matter of debate. Whether rural demand will come back, there are inherent signs that it should, and therefore I think Q4, from a rural consumption perspective, should be relatively better. For urban consumption, again, I think not all pockets are probably very, very sticky, and therefore I think the pockets which are still showing resilience is the premiumization pocket for urban demand, which has still remained steady as we speak. Obviously, input costs have remained stable so far, except palm oil prices. So I think a lot of the food producing companies or snacks producing companies might feel the heat this time around. But outside of that, I think you probably look at a large part of the input cost universe has largely remained stable. On the volume side, again, I think a negative volume growth is something that the market was fearing. With increased ad spends is what I'm perceiving as a bottom line for these companies. Introducing more SKUs, reducing grammage, but maintaining their prices. They probably held on to a flattish volume growth or very, very negligible volume growth instead of a negative volume growth. But for FMCG companies, Sakshi, to probably have that leverage, you need to have the advantage of both volume and price. And both are probably missing at this juncture. So my own sense is that the hope is for a Q4 recovery, but my sincere analysis believes that Q1 will where I think there will be some element of respite for FMCG companies. I think the next quarter will be equal with that.
Okay, got that. Let's also welcome Mitesh Panchal, who's joining in to track the technicals for us this morning. Warm welcome to you, Mitesh. Good to have you again. Beginning of the F&O series, there are 4 F&O stocks that have also been included starting day 2. How are you looking at the markets just one day before the budget? We've had 4 consecutive series of negative returns. Will things turn better in February series for the markets?
So before I comment on the market, few boring strategies going ahead. First is that I request all the viewers to please hedge your positions because that is very important. Second is that as far as the intraday strategy is concerned for the budget day, please don't do it because you will have a wild swing. So not advisable to participate on that day. And third thing, if you are making some sort of a profit in last 4 or 5 days position, then advisable to book the partial profit. Of course, this looks pretty boring, but this is the way how additional alpha can be generated in the market like this. Now coming to the indices, since last 3 days, both Nifty and Bank Nifty is going for a higher top, higher bottom formation. So now As far as Bank Nifty is concerned, 49,650 is a trend reversal. So once we get out of 49,650 on an hourly chart, yes, we can say that then, Sakshi, that the bottom is in place, which is a recent low of around 48,200. And we can then think about higher highs. But as long as 49,650 is intact on the upside, we can't say that, yes, the bottom is in place. Similar is the case with Nifty. As far as the trend reversal level is concerned, it is 23,426. That is the high which it has formed on 21st of January 2025. So once the Nifty start trading on an hourly chart about 23,426, we can say that the bottom is in the place. And yes, the indices will go higher. So these are the two trend reversal level which one need to take into the consideration. Apart from that, as far as the volatility is concerned and the stock specific actions are concerned, I think PSU will deliver a very strong return with respect to the trading perspective in next 3 to 4 days, because majority of the PSU stocks are in an oversold zone. So if any trader want to watch out or want to venture into the intraday or short-term trading, probably the basket which one should look for is PSU only.
Got that. Okay, Mitesh. We'll also bring in Mayuresh back into the conversation. Mayuresh, PSUs, PSU banks, how are you really looking at this space, particularly earnings came through for many of them. This space did show us some bounce as well. Do you expect any OFS related measures being announced in the budget for at least some of them in the PSU banking space in the budget?
So I think, relatively speaking, valuations are still very, very inexpensive for a large part of the PSU banking universe, Sakshi. And therefore, numbers have been relatively better again. So if you probably look at asset quality, there is not too much of deterioration that you're seeing there, both in terms of reported GNP, NPA numbers, but also the slippages and the restructured book. The second element, obviously, is the credit deposit ratios are holding up. The deposit base is very, very sticky for a large part of the PSU banking universe. The third element is NIMs have not compressed so much. And again, with the higher PCR, any recoveries that probably happen onto that system or balance sheet goes directly onto the bottom line, which probably aids their bottom line growth, as well as ROEs and ROEs as well. So yeah, I think selectively, as I said, the universe in the banking space, as far as PSUs are concerned, looks constructive. Obviously, stocks like Bank of Maharashtra, Bank of Baroda might do well. Again, Bank of Baroda, purely with the fact that the stretched LDRs and the liquidity infusion might help them. Numbers have also been decent enough. But let's see, I think, how it goes. So what kind of recapitalization measures happen? You're talking about privatization. That has to happen for the markets to probably be.
Got that. Okay, so that's as far as the banks are concerned. Mitesh, will also get you to talk about any key stocks that you're looking at for today. Is there an opportunity in the mid and the small caps, or would you stick with the large caps for today?
No, as I said, all eyes are on the PSU. So what is looking interesting right now is BHEL BHEL at the current level. At around 196 with a stop of 190, one can go long into BHEL for the potential target of 210, 220. And second stock, which is gathering steam, is ONGC. If you look at the structure of ONGC since last two trading sessions, after forming its bottom at around 246 level, part of higher bottom formation with strong volume indicating a trend reversal. So with a deep stop loss of 246, one can go long at the current level for the potential target of 270 and 280. So BHEL and ONGC is on our radar.
BHEL and ONGC is the trading stocks that you can definitely look at. Mayuresh, I also wanted to discuss the entire insurance space with you, and especially with PB Fintech also coming in with the earnings. We'll discuss that aspect as well. There is a lot of expectation that insurance is up for, a lot of reformative measures that could come in. They have been in discussion. We are just awaiting announcements to come in, be it with, composite licenses for both sides of insurance policies being able to be sold by one insurer, agents being able to sell multiple companies or insurance policies as well. And of course, FDI, 100% FDI and insurance, all of those measures are being discussed. How are you approaching the insurance basket at large? And what would you say on PB Fintech post the earnings?
Okay, decent numbers. Paucity of time, Sakshi, again. I think decent numbers. But again, for the universe as a whole, as you're rightly pointing out, I think the street is probably waiting out for some clarity happening on these aspects as well. Obviously, the larger corporate houses, which have both the life and the non-life part embedded as a part of their business model, it's a lot more easier to probably have synergies established between them. And therefore, I think a large part of the cost synergies can actually come through in a very positive manner. And that can compound the revenue synergies. As cost synergies probably integrate. So I think the larger corporates which probably have both these aspects put together might benefit a tad bit better. And a large part of the universe is with larger corporates because entry barriers for this industry are pretty tough and it's a tough business to get in. Obviously, as a sunshine industry, how the product mix happens, how the invented value improves specifically for the life insurance part, and how do they manage their gross premiums on the non-insurance part is going to be extremely critical. Obviously, under-penetration is stark, and therefore, I think there is huge scope. But I think earnings have not still reflected in a large part of this universe.
Okay. Mitish, do you also have a favorite within the insurance basket right now? Should you look at it?
Sorry, not right now, Sakshi, because the entire focus is on PSU. Because what we are looking at right now technically is where the risk reward ratio stands at. So for us, there is nothing like favorite or non-favorite, but where we take a call based on the risk reward ratio. So right now, the risk reward ratio is panning out pretty well in PSU stocks, but as compared to any other sector.
Okay, very quickly, Mayuresh, L&T order book has increased by 20% year on year. Earnings came in with profits increasing 14%. EBITDA improved as well. Margins came in, however, slightly lower than last year. How would you look at it?
So, decent set of numbers, Sakshi. And again, I think as a barometer of the Indian economy, I think they have been performing resiliently well. And if there is uh, the hope that India remains the best market, which it should and it will, I think L&T becomes the front runner in terms of being the torchbearer for infrastructure growth. So, decent and very good set of numbers, man.
Okay, got that. All right, let's shift our focus to the market opening viewers. This is the economic survey day and a day ahead of the union budget being presented. 23,000 to 90. We are opened higher, about 1/10% up for the Nifty. Nifty Bank, however, on the back foot, about 0.3% of a decline for the Nifty Bank today, 176 points gone right in the opening tick on that front. But let's look at some of these key counters. L&T, Bank of Baroda, Dabur, these were the big earnings that came in. IT index is opening about 1% higher. So the IT will be in focus. L&T about 3.5% uptick for this one that you can actually see. The Nifty Bank is lower, but the mid caps are high. About 0.18% uptick can be seen on the broader markets. So they are recovering. 1,035 advances to 492 declines as of now in terms of the move. Small caps also about 0.3% higher in trade. That's how the major indices have truly opened. But with Nifty Bank really on the back foot at this point in time. Let's look at some of the other sectors. So the financials are also lower. PSU banks are also 0.4% lower. CPSE index is 0.4% lower. Metals are down. But FMCG, IT, auto index, pharma index, and the capital goods index, they are opening up. In fact, it's the capital goods majors that are opening about 1.8% higher in trade. That's the one that's outperforming in terms of sectors at this point in time. Top gainers on the Nifty, L&T, Tata Consumer Products, and Titan. These are the top movers as far as the Nifty is concerned. You also have the IT names like Wipro and Infosys pulling up, and BEL again post earnings that continues to shine through. On the lower end, you have Adani Enterprises post the earnings, Bajaj Finserv, Bharti Airtel, BPCL as some of the counters that are declining. Coal India as well losing a bit of ground. But on the whole, it's largely skewed towards the positives. L&T, BEL, you have Tata Motors also yet again after the earnings came through improving now about 1.3% higher. Trent is up in trade. Titan, Wipro, these are the stocks that are passing. Among earnings, you have Naveen Fluorine, that's 7% higher. L&T, that's now 3.5% up. And Aarti Industries, that's also moving in trade on the higher side, about 2.7% up and about. On the earnings front is JSPL, that's actually down 10%. 5% lower post the earnings, 756. But Biocon, Tata Consumer Products, L&T, and even Kalyan Jewellers is opening flattish with a positive bias. PB Fintech about 2.7% lower post earnings. Sri Cement flat with a positive bias, and Bank of Baroda slightly lower, 3.8% in fact cut now on Bank of Baroda right now. Prestige Estates lower post earnings. Concor about 5% lower post earnings, but it's Naveen Fluorine and Astral that are opening higher in terms of the mid caps in terms of earnings that are coming. Bajaj Holdings, Ajanta Pharma, Avas Financiers, these have been the other earning reporting companies that are also up and about in trade. Going back to Mitesh, how do you see the opening right now, Mitesh? What catches your attention?
So far, so good because all stocks are coming on the surfaces which are actually highly oversold in the recent past. For an example, look at Astral. The kind of move which you have early in 4 or 5 minutes is really surprising. At 1524, one should go long with a stop of 1500 for intraday potential target of 1550, 1575. Second is Angel One, looking pretty promising in the early minutes. At 2196, one can go long with a stop of 2180 for the potential target of 2250, 2260. So yes, the opening stock specifically is promising. Probably we can close the day at the high point of the day. That is what is indicated right now.
Okay, got that. So there you have it. The results are getting a reaction right now. The markets are about 0.2% higher on the Nifty, whereas it's the IT space and some of the capital goods majors that are actually up and about, consumer durables and FMCG names also pulling up in trade. But let's look at some of the other stocks. One Source Specialty is 5% lower. Then you have Prestige Estate post earnings, 5% lower. Concor is lower post earnings. Ajanta Pharma slightly up. Kalyan Jewellers 1.8% higher in trade right now. Those are some of the stocks that we are looking at. Vari Energy is 12% higher. That's the one that you should look at. Again, post earnings, a very strong surge that you can see, 24.55 for Vari Energy's post earnings. Foodlot continues to be up, third day in a row, 3.6% higher. Let's get Mayurish's view here. Mayurish, solar space, renewable energy space, are they in for some goodies in the upcoming budget? Is this a space that one should increase their focus on right now?
From a domestic perspective, yes, because I think the renewable component is going to increase to 500 gigawatts over the next 5 to 6 years, which means there is going to be accelerated investments, not just from the PSU side or the government side, but also from the private side as well. And therefore, I think with accelerated investments coming through, I think the entire ecosystem, as I've been time and again mentioning, whether they're producers selectively, transmitters, transformer players, which have moved quite significantly over the last few quarters based on numbers and shortage of capacity, EPC players or even financiers selectively should do well. So you need to be selective, but this space will do well. Again, I think a part of this universe, which is export oriented, with Trump coming in, I think the act that they're expected to put on hold in terms of manufacturing of modules, cells, and more manufacturing happening in India, the incentives given there, both for manufacturing modules and cells. I think that needs to be monitored very, very closely because if that is cracked, I think a few companies which are probably exporting or have set up units to probably ensure that this happens might be under some sort of pressure.
Okay, got that. One more space that I wanted to discuss, Mitesh. Last few days, we are seeing some pickup as far as chemical space, specialty chemicals is interesting, is looking interesting. Naveen Fluorine, SRF, RT Industries, Ami Organics, many of these chemical focused stocks are actually buzzing in trade. Is this a space that interests you?
Not now, because what we see is a technical bounce. So the trend reversal levels are far away from here. So let's wait and watch for more confirmation because we are not comfortable with the delivery based buying going on. So yes, wait and watch. Once we get the confirmation on the weekly chart, probably in the higher time, that is the time when one should jump into this space.
Okay, let's focus on some of the other stocks then. Mayuresh, you did talk about Trump, and I wanted to get back to the IT space right there. You know, looking at what has happened over the last 1 week, the entire focus on AI, that's the mega trend that's emerging worldwide. And, even though this has largely to do with the big tech firms, NVIDIAs of the world, and what the impact of DeepSeek and such emerging AI technologies, competition rising pricing right there is concerned. But where does India stand there? We did see some knee-jerk reaction on smaller stocks like NetWeb or maybe Anant Raj, but we do not have any, such a big AI player back home in India. Where does India stand when it comes to the big AI talk?
We are down the value chain, very frankly and very honestly, right? And that's where the IT minister has probably put forth that we will have something coming up in the next few months. And that is a positive sign. Again, I think the IP that our companies have is in terms of outsourcing. But a large element of what is now transforming, and if you probably look through a lot of transcripts, Shakshi, is that they are probably getting a lot more in terms of deep learning as far as AI, Gen AI is concerned. So what NVIDIA probably does in terms of power computing, right, in terms of both its chips as well as the hardware that it probably uses, our companies are a lot more in terms of the IP processes that drive the processes behind that and not necessarily the hardware behind that. So we are not necessarily platform companies which might get impacted like NVIDIA if such competition keeps going up. Obviously, there is some element of dispute in terms of IP theft that a couple of the large mega caps have probably pointed out towards DeepSeek. But again, it's evolving, and our companies are probably evolving as well. So if you go through presentations, there are a couple of slides that each company has put through in terms of how Gen AI as a business unit is expected to grow, and how deep learning is probably getting embedded into the systems.
Absolutely. Let's also get talking on a bit of commodities and stocks and sectors linked to that as well. Gold is something let's discuss. Remember last time around in the budget, there was a slash in customs duty that pulled up all these stocks higher. There was higher demand. The gold prices also shot up to all-time high levels again. But that has been seen somewhat negative for the economy because that stretched the current account deficit. It's put the pressure on the rupee as well. And of course, we are seeing gold prices at elevated levels right now, even though the imports are also at a high. Mayuresh, how do you see gold getting impacted, commodities being seen in the budget, and the impact? Today, some of the stocks are up. You know, you have a Titan, Kalyan Jewelers, they're all up and about. But what exactly are you looking at this gold story? How is it going to unfold?
It's acting as a perfect hedge, right? I think a lot of sovereign wealth funds are buying into gold. A lot of economies are probably buying into gold as well. And therefore, gold reserves actually, if you see as a percentage of holding, for a lot of governments across the globe, has gone up significantly. The second aspect is we are obviously going to hit volatile times because US debt is not sustainable. It is expected to come down. Trump will announce policies to ensure that it comes down. And when there is unwinding of US debt, which happens at such proportions, there are two effects. One, I think yields will start moving higher, and there will be an impact on emerging currencies. So I think to safeguard that against what happens, gold becomes an appropriate hedge. It's moved up significantly. Mitesh Bhai will be able to tell you the technical levels appropriately. But again, I think it becomes a perfect strategy, and I've always maintained that as a portfolio percentage, gold should be a part of your portfolio as a small percentage of your overall totals.
Got that. Mitesh, any gold-related stocks on top of your radar? Do you think that's something that investors should look for shopping?
I think the question which you asked Mayuresh Bhai and me, I think we should ask this question to you because you are ultimate buyer. So the buyer knows better than both of us. Okay. So not per se interested in any gold jewelry related stocks except Titan. But yes, I mean, one interesting fact which I would like. Yes, Mayuresh Bhai.
Then, मितेश भाई, sorry to interrupt. साक्षी से ज्यादा शैल भाई को पकड़ो.
Acha. I don't know. Acha. Okay, okay. When Shelva is there on hand, we'll definitely ask the same question to him.
Yeah.
Okay. So now the interesting observation which we have seen, Sakshi, past a few years is that the gap between the price of gold and silver is narrowed down. I'm looking at the chart right now. Gold is trading at MCX 82,000 and silver is trading at 93,000. So there is hardly a 10,000 rupees of a gap between that. So I think technically speaking, there is much more money to be made in silver as compared to gold. So right now we are bullish with a target of 1,25,000 as far as silver is concerned. And as far as gold is concerned, our target is already met. I mean, we have a target of 81,500 that is already met. Now we are heading for 85,000, 86,000. But till that time, the money making opportunities is in silver as compared to gold.
Okay, money making opportunity more in silver than gold, but Marish believes gold should definitely be a part of the portfolio. There is no brainer on that as well. Marish, we do have to let you go, but do help us understand, just before the budget, what are you keeping your fingers crossed for? And, post the budget, where are you going to be shopping more? Are you keeping your carts ready with all the stocks that you already have in mind? What exactly are you going to be doing in terms of strategy then post budget?
So again, Sakshi, as you know, I think over the last few weeks we've been extremely light onto the markets.
Yeah.
There expected to be volatility, which might still continue. Budget might turn out to be a non-event in
Hmm.
totality, and therefore I think markets will revert back post-budget into how earnings are, how global macros are playing out. And we still remain in a rally attempt as far as markets in India is concerned. A lot of the global economies that we are tracking still remain soft because of a combination of these factors put together. And therefore, I think we will have a wait and watch probably done. But the strategy perspective will be more domestic driven, more cyclical driven, and more earnings driven as far as domestic economy is concerned. So it will be more domestic cyclicals, very, very sector and stock specific.
Will FIIs return post the budget to India, Mayuresh?
So post budget to pata nahi Sakshi, but I can tell you this, right? India is a story outside US which will keep on growing, and it's far better in terms of a political landscape, economic landscape. Look at the neighbors around us. Look at a lot of the commodity-driven economies, not restricted to Brazil, Indonesia. They will have their pain points coming up time and again, and therefore outside the mother market, which is US, you name one market which is doing well except India, and therefore. आएंगे तो जरूर और जब आएंगे तो आई थिंक भर भर के आएंगे और शायद एक पेनफुल एंट्री भी होगी जब आएंगे.
Okay, got that. Well, Mayuresh, thank you so much for being with us, on the show and helping us with all of your wonderful insights. It's always a pleasure to speak to you on the show, and we'll get you, to talk more about strategies post the budget now, I guess. Tomorrow is the D-Day. Let's see how it goes, and we'll catch you soon next week on the budget and more.
Thank you, Sakshi. Thank you, Mitesh. You guys have a good weekend.
Thank you so much. Mitesh, we'll start discussing some of the stocks there. F&O inclusion stocks, anything that you like, Solar Industries, Torrent, NBCC, Phoenix. What should be investor strategy on these newcomers?
I mean, just wait and watch for the newcomers because I think the newcomers have entered at a time when the volatility is pretty high, and the kind of things which you spoke about are generally high beta stocks. So advisable, just be very careful right now, Sakshi, because see, on one hand, you are getting all the large cap at a very decent price. I mean, at a bargain price. At the same time, you are getting the high beta stocks at a much discounted rate. So it is a difficult choice between the traders and the investor where to go, either on the high beta side or on the large cap side. We prefer that as long as the volatility is there, go for stocks like Reliance or Astral or Maruti or Hero MotoCorp rather than entering into any of such mid cap stocks which are newly entered or which are already entered. For example, the way by which Kalyani Jewelers have witnessed a sharp fall post its entry into F&O. So such things can happen. So advisable to avoid right now.
Right. Okay. Got that. Mid and small caps are catching some more action, Mitesh, and they're picking up pace too. There has been some sort of a recovery in the last few days on the mid and the small caps after those terrible days of falls that we've seen. Are things improving here? Are you looking at it positively? And what catches your attention right now?
Yeah, so few stocks are bargain hunters, no doubt about it. But I mean, you can't paint the entire with the same brush. You can't paint the entire painting with the same brush. So I mean, in majority of the stocks, Sakshi, whatever upside you are looking at is just a pullback rally, and rally may get converted into the trend, but you have to wait and watch. So two stocks which we are looking at is first is Ambika Cotton Mill, our all-time favorite. So I think the stock is trading at a level which is where the risk-reward ratio is not that bad. So at 1484, at 14 with a stop of 1420, one can go long for the potential target of 1600. And one small ticket stocks which is really looking promising at this point of time is Infibeam Avenue. So if you look at the chart of even you. Recently, the stock has witnessed a strong correction, and post-correction, stock has spent a quality time into the consolidation. Now, I think Infibim at 22 is looking very promising. So yes, at this level, Infibim, one can start accumulating the stocks. Again, Sakshi, one need to be very careful in terms of accumulation, because at this point of time, what we are advising to our client is not just to go and pick the stock, but discipline with respect to allocation of the capital. That is where it will generate more alpha. So allocate the capital in tranches right now. Market is here to stay for a longer period of time. You will get enough opportunity to participate. But if you are done with the capital, then probably you won't have any chance to participate. So be very careful with your capital allocation right now.
Absolutely. Also, Mitesh, help us now understand. You did say that it's better to avoid the index on budget day tomorrow because there could be wild swings. But in terms of any key sectors, where should investors keep their focus on if somebody really wants to take the benefit of the budget day announcements to come in? Where is it better to keep their focus? Of course, some of the sectors are going to see some announcements. Where can one keep their attention?
I think two sectors where we think one should keep their attention is, one is fertilizer and second is sugar. I think these
Okay.
two sectors are likely to perform good if you're especially talking about the budget day. But as you and I know, Sakshi, that I mean, budget is just a one-day event.
Yeah.
So we need to be very careful with respect to capital allocation, because what we are seeing, Sakshi, right now is that if you are sensible enough in this market, you will melt a good amount of money next 1.5 years. So
Mm.
ignore the noise, do your homework properly, and focus on those stocks which will benefit in the near future. So we see per se a very strong price action in some of the sectors and stocks in next 1.5 years.
Okay, got that. But sugar, there is this proxy play Praj Industries that we have seen in action over the last few months. But after the earnings, there is a dip again. Let me just share where exactly have investors seen a dampening effect. So the revenues are just up 3% for the company. EBITDA has come down 25.5%. Margins have come down 8.5% versus 11.8%, and the net profit is down by 41%, and therefore the disappointment 6% lower for Praj Industries. Now, this used to be seen a very good proxy play for the sugar industry at large. What would you do here? Earnings have disappointed. Should one stay away?
Absolutely. See, Sakshi, in commodity related stocks, never play the proxy play. Because that when you're talking about playing a proxy play, you're talking about playing derivatives. So
Yeah.
I think Raj is nothing but a derivative of a sugar sector. Okay, so if you're playing, just play plain vanilla sugar sector. That is, you can go ahead with Balrampur Chini or EID Parry or Dampur sugar only. When you're talking about fertilizer, go for Madras fertilizer or Chambal fertilizer or Coromandel only. So our experience says that when you're trying to pick up a commodity cycle, it is only the pure commodity related stocks are making money, not the proxy play. So one need to be very careful here.
Okay, one needs to be very, very careful here. But let's look at where the pain is escalating. JSPL now 13% lower in trade. And, I want to understand from you, metals have again been a very, very volatile story. And with such earnings coming through and the reaction coming through, how would you look at such stocks like JSPL?
So JSPL at 731, it is the biggest loser in FNO segment today,
Yeah.
13.58. So I think I am of the view, since it's a part of an FNO, so any intraday player can also short. Advisable to avoid it. Where is the floor? Probably 680 and 650 are the two ranges in which the stock might pause based on monthly and quarterly charts. So till that time, the downside is intact. Advisable to avoid the stock right now.
Okay. We'll also discuss one pocket which we haven't focused on today much, and that's the banks clearly. PSUs versus private banks is something that, Mitesh, I want your view on. Today, it's the day of large PSU banks, I believe, PNB, SBI. Those are the stocks that are moving in, or smaller private sector banks like an IndusInd or a Federal. But larger ones are on the back foot. ICICI, HDFC, that's on the back foot. Kotak Mahindra Bank, something that was pulling picking up of late. What exactly is your choice when it comes to the banks, private or PSU banks?
So the view is very simple and clear that as far as the private banks are concerned, just pick up two banks. Technically now IndusInd is looking pretty promising at the current level, and second
Hmm.
is Kotak Mahindra Bank is also looking pretty promising at the current level. So these are the two banks which we are technically looking at. Earlier our preference was HDFC and Kotak. Now we have added one more bank, that is IndusInd. So three banks which one should look at: IndusInd, HDFC, and Kotak Mahindra Bank. Somehow since last 2 days, as you said, Sakshi, very rightly, that steam is picking up with respect to PSU Bank. And in that also, if you look at the SBI, the chart is looking promising both on hourly chart and on the daily chart. So I think SBI is one where one should look at.
Okay, got that. So SBI is something that you should be looking at right there. Let's look at some of the other pockets. Okay, let's discuss pharma space. We haven't touched that also, Mitesh. Interesting moves that have come in on Cipla over the last few days. We're also seeing some moves on the mid-cap pharma space as well. Today, Wockhardt is up in trade, by the way. Your sense on this entire pharma basket? It's been an outperformer in 2024. Which are the stocks that you believe could be looked at for further move from here on? Today also the index is up nearly 1%, so the buying is coming in on various stocks. So how should one select?
Okay, so in such market, what is looking promising is in pharma is MNC play. So if you're looking at the AstraZeneca Pharma, the chart is looking pretty promising since last three trading sessions. It's a heart of R bottom formation. Yesterday's close was 7262, so probably the stock is heading for around 8,500 to 9,000 level. Second, after a steep correction, now Pfizer is also looking for a very strong comeback. So at 4,519, 4,519, that is also looking promising with a top of 4,420 for the potential target of 4,700, 4,800. So as of now, technically speaking, what is looking promising is MNC Pharma as compared to the Indian pharma stocks.
Okay, MNC Pharma is something that you could be looking at right there. So let's keep in mind those particular stocks from the pharma pack too. Okay, let's bring up some other pockets where we are looking at some interesting names. Consumption baskets, that's looking good. And Mitesh, we've been all discussing how there is a need to boost consumption via this budget. The government should look at putting more money in the hands of people so that consumption picks up pace. There is better demand, and that will only overall help the economy to within the consumption basket. In case there is an announcement there, which are the stocks that you will go big on? Will it be the staples? Will it be the discretionary? You did talk about the jewelry space and the gems in the jewelry space and gold space and silver space as well. But overall, when it comes to consumption, what would you choose?
I think as far as consumption is concerned, two stocks stands out right now, Sakshi. First is Nestle and second is Britannia. Any
Hmm.
positive outcome in the budget will lead these two stock for a vertical rally. So we are very
Okay.
patiently looking at both Nestle and Britannia. If on the budget day, any movement on the 15 minutes chart or 30 minutes chart, it's going to be a big buying opportunity. And within a very short period of time, the stocks will surprise and deliver close to 10 to 15% return. So these are the two stocks which we are looking at with respect to the consumption theme.
Okay, got that. We'll also discuss one more pocket that we haven't touched, and that is the auto space as well. Why, Mitesh, am I bringing this up is because we have seen extreme volatility on Tata Motors. Post the earnings, there's been a sharp disappointment, and this has been one stock which in 2024 most of the investors went big on, and they invested in this stock because it was in an upward rally. It went up sharply, but it has been cooling off consistently over the last 4 months, and finally it slipped below 700 mark yesterday. There is some buoyancy today, 0.6% odd. Does it give you confidence to add Tata Motors at this point in time, or do you fear some more downside pressures to continue? Because again, in the earnings, what they have penciled in is that JLR is facing some margin issues. Commercial vehicles, passenger vehicles is again facing demand issues. There is an increased competition in the EV space again. Or are you confident that Tata Motors will be able to bounce back?
Interestingly, Sakshi, post 2015, this is the first ever in the year 2024, after a decade or so, first ever monthly fall for a six consecutive months. The
Yeah.
same pattern took place in the year 2015, for where in the month of March it has formed a high at 594, and after that there are 7 months in which the stock finally formed a bottom at 301, and then it took the upside and again form a high of 598 after 2015. Success, this is the first time where Tata Motor is actually running in red with respect to the 7th month. Okay, so I think my conclusion is that above 810 only my conviction will come. I will buy Tata Motor at a higher price rather than venturing at a lower end of the range. Reason being is this:
Interesting.
that this is a large cap stock, and after such a steep fall, generally the stock spend quality time in consolidation. So money never sleeps. So I do not want to put my money in those stocks where I have to wait for a longer period of time to generate alpha. Better to pick up those stocks right now within the auto where I see good amount of visibility. Above 810 probably stock will be again poised for an all-time high. So the buying level for me in Tata Motor is 810. On a weekly chart, once it give a close above 810, I will be a buyer. Till that, I will completely avoid this stock.
Okay, well, thank you so much, Mitesh, for helping us navigate through so many sectors and various stocks and helping us with the budget day strategies as well. So good to always speak to you and get those wonderful insights going for our viewers. Let's hope that things improve and good to see that the Nifty is also inching towards the day high. 23,350 right now. We're 100 points higher in trade as far as the Nifty is concerned. The Nifty Bank is about 0.3% lower. It's still on the back foot, 49,168. But various sectors and stocks contributing: IT, consumer durables, capital goods. You have the gems and the jewelry space stocks that are buzzing in trade. You have IT is now over 1% higher. So that's the one that is clearly, contributing to the trade right now. Then you also have some buzz that is coming in across the board. So let's look at a few sectors and see where exactly is this buying action emerging. And then we will look at the index contributors as well. So the broader markets have also picked up pace. Now you have a 0.9% of an uptick on the mid caps and the small caps up by 0.8%. So the broader markets are clearly helping the markets inch further. Auto is driving in a faster lane, a percent higher for this one, apart from IT. Then you also have gains on FMCG and Pharma index, 0.7% each. Realty 0.7% higher as well. Consumer durables are 1% up in trade. Financial services are also picking up pace right now in trade. So that's how the index action is looking at right now. On the Nifty, when we look at the key stocks, you have Trent as the top mover, 3% higher, L&T 3% up after earnings, Tata Consumer Products, Titan and BEL as some of those stocks that are truly in the winning zone right now. When we look at the top drags, Bharti Airtel is lower, ITC Hotels is also trading a bit lower, 2% today. Remember, this is the dummy rate in action, T+2, and we are going to be seeing till third day how the hotel stock is moving. ICICI Bank, Bajaj Finserv, HDFC Bank, Adani Enterprises are those which are still on the back foot right now. We'll wrap it up at that, viewers, on this account, but do stay tuned throughout the course of the day. There will be focus on the economic survey, what comes out of that, what does it indicate for the budget day strategies. All through the day, you will be seeing some interesting conversations coming through. So stay tuned with us for this action-packed day on Business Today Television.
Good morning, ladies and gentlemen. Welcome to Business Today Television. This is Shail Bhatnagar. Continuing with our coverage of top quality third quarter earnings, we are now focusing on KPIT Technologies. The stock is in top shape, up 71 rupees at 1442 rupees. This is a 5.2